All right, hello. So may I welcome on stage, please, we have got Omar Bawa, co-founder and COO of Goodwall. Madeleine, are you Madeleine or Madeleine? Madeleine, I should have asked that before. Clouteau?
Yes.
Yes! All right, that's the extent of my French. Country manager and director of Luno, France, and Curtis Ting, SVP operations of blockchain.com. Hello, how are you? All right, we're going to get right into it. So this topic is, the prior one also as someone who's a parent of a soccer player, football player, was very excited about the prior one. This one also touches right here, hits me right here. There is just so much that stablecoins and digital assets can do to indeed break down financial barriers. You know, so much in the news just lumps crypto into crypto, this one monolithic thing. What the potential of cryptography and blockchain, it's all about kind of crypto investments and speculative trading and all of that, as opposed to what cryptography and blockchain put together can actually enable. And that's what we're going to talk about today. It also strikes me as kind of almost funny how technological innovators, regardless of the industry, like to use terms that actually are kind of painful, like cutting edge, bleeding edge, tip of the spear. Ouch! You know, those actually hurt. What about being on the caring edge? This might sound goofy, but that's kind of where we're sitting today, right? So we are really, really fortunate to have the leaders from 3 companies that are absolutely making a massive difference in emerging markets in particular. And when we think about emerging markets, we're thinking about economies generally south of the equator that have banking systems that are unreliable, governments that are unreliable, infrastructure that's unreliable, perhaps all 3 are unreliable. And so when you think about that, suddenly this concept of a stable currency, a stable version of a fiat currency like USDC or EURC, the product market fit is pretty crystal clear. So what we'd like to do to start out here, that's what we're going to explore right now. And I'd like to first dive in by just having you all introduce yourselves and share sort of who you are and what your company does, and then we'll move into the next chapter of this particular panel. Do you want to go ahead and get us started?
Sure.
Thanks.
Well, first of all, thank you so much,
Absolutely.
Elisabeth, for having us here today. Really, really grateful to be on this panel, which speaks to our heart, and to be here in Paris. So I'm Omar. I'm a co-founder of Goodwall. Maybe a couple of words before Goodwall on my story.
Yeah.
So I was born into a humanitarian family of sorts. My brother and I, well, we were raised by humanitarian parents, you could say. Our father served the UNHCR.
Yep, absolutely. Yep.
Served the UNHCR for around 30 years in Iraq, Afghanistan, the last Gulf War. And our mother was the first female employee of the Global Fund to fight HIV, AIDS, TB, and malaria. So you could say we grew up with a desire to create meaningful impact with our lives. There was one moment in particular that struck us and got us on this path. We were around the age of, let's say, 7, 8 years old, and we were accompanying our father on one of his missions with the UNHCR to help and visit refugees. So on a mission to a refugee camp on the eastern border of Iran, on the border with Afghanistan. And here we were, kids playing with these other kids, our own age, refugees, and then we were asked to distribute sweets to those same kids. And that got us, it kind of struck us as a little uncomfortable as to why were we the kids distributing sweets? These were kids who we were just playing with a moment earlier. What was this change in dynamic? And that's when we noticed what you would maybe call the opportunity gap. And since then, fast forward a little bit, we've been on a mission to really close that gap or bridge that gap from an opportunity perspective and level the playing field for youth everywhere, which leads us to Goodwall. But maybe I'll let the others have a brief intro first.
Excellent. Thank you, Omar. Thank you.
A bit more about that.
Hi, thank you so much for having us. I'm representing here Luno, who actually is almost as old as Circle with 10 years. It's a wallet that was born actually in South Africa. That's now obviously is all around the world with maximum of its customer base, big in APAC and South Africa. Obviously, we enable customers to buy, sell, send, receive cryptocurrencies and stablecoins as well. I'll let you introduce yourself.
Okay.
Yeah, thanks for having us.
Absolutely, Curtis. Yeah.
I'm Curtis. I'm with blockchain.com. I've been in the crypto space for about 8 years now. I started as a law enforcement investigator before I moved into the industry to help build some of the global platforms. Extremely excited about this mission today. If you discovered crypto between like 2012 and 2017, you probably came across at some point or another our Blockchain Explorer product or our wallet. It was one of the earlier options for custody. Today, we are global. We serve about 40 million verified users around the world. And when you think about 40 million, it's like, how does that compare to the 7 billion people on this planet? It ain't very much, which means we got a lot of work to do. And a lot of that work is in the emerging markets. So we're super excited to chat about this today.
Yeah, excellent. All right, so let's dive into sort of the evolution of digital assets in emerging markets. You're all involved in one way or the other in enabling access to financial services for the people and the constituents that you serve. And particularly in the context of the changing landscape of digital asset adoption, I'm curious about how you think about adoption in the diverse regions that you serve. Any one of you can kick it off.
Yeah, I think it was really interesting to hear you speak earlier.
Yeah.
Because I think the aspect around the pain point being so important, I think in the push factor to actually go toward cryptocurrency, this push factor is stronger in those markets. When we're looking at South Africa, or we're looking at Zimbabwe, for example, inflation is a reality.
Yeah.
People having the impression that they're losing their money.
Yeah.
And an impression...
It's really happening. It's more than an impression.
Not the wrong word.
Yeah.
So, and the amount of fees that we're looking at it is not something that's easy. So when we're looking at those markets, it's a bit different. We're not looking at only people that are enthusiastic about technology. We're looking at people that have their full-time job and that want to have the ability to put their children to school, to kind of plan in the future in the next 10 years, not just in the next 100 of years. So I think that's a really important difference that we need to look at. If those people are very much looking at banking products that are simple to use, that they can use every day. And I think that's a very important difference here.
Yeah, absolutely. Omar, Curtis, anything? Otherwise, we have so many topics I'm dying to dive into. But
we've got lots of thoughts on this one.
Yeah.
When you think about adoption and you think about evolution of the industry, you also have to think about the evolution of money in general.
Yep.
Like modern finance, the evolution has occurred into a sort of stack, right? Like it started with value, gold, whatever. Then it was bonds. Then it was stocks. Then it was insurance. And then today, it's like investable assets. And the question is how in the world are we seeing evolution happen at every level of this stack today? That is the power of the fact that only 10 years on, we're seeing projects hitting every piece of this.
That's a good point. Yeah, it's only been such a short,
And the question is, why do we think about adoption primarily in the established markets as an investment vehicle? Why do we think about crypto success as how many people have invested in crypto? It's because that's sort of the unstated goal, I think, of someone's financial journey today in an established market. It's do you have a bank account? Do you have a debit card? Do you have a credit score? Oh, do you have investable assets? And so if that's the stated end goal, even if it's, implied, then of course, that's the metric. But when we see the evolution, I think, in the emerging markets, what makes a market emerging?
Right.
It's the fact that every layer of this modern financial system has not fully permeated to become accessible to everyone. It's in bits and pieces. It's, as you put it, Elisabeth, contingent on regulation, contingent on the viability and resilience of payment services. And so we look at adoption in a more fundamental sense, and what we really care about is how many people are actually using our platform to transact. And there, the story is almost all south. It's in these markets where the use case is not investment. The use case is more fundamental to the crypto vision, which is using it.
Exchange of value. Yeah, exactly.
Maybe just to build on what Curtis was saying, I really see this evolution maybe accelerating, right? If you think back to our focus group or in terms of adoption, right? You've got 1 billion young people who are expected to enter the workforce this decade. Of that billion, 90% are in emerging or developing economies. 80% in the global south, as you were mentioning, Curtis. And our fundamental mission is to level the playing field for youth everywhere and connect as many of these young people to opportunities. But the reality is there aren't many opportunities for them today. In Africa, you were mentioning South Africa earlier. For every 11 young people who enter the workforce today, there are only 3 new jobs that are created. So massive talent surplus, massive job shortage. So there's a huge opportunity there in terms of connecting that youth force to this new economy.
Which is part of what your vision is,
Exactly. And that's also where we see, the value and increasing adoption of, I would say less crypto, but more stable coins, or in the sense of like transacting and not investing necessarily.
That's a great layup for the next topic, which is stablecoins specifically. When you think about the applications of stablecoins themselves, something like USDC, a stable digital version of a dollar, for promoting financial inclusion, whether we're talking about doing that because it provides access to financial markets because it enables cross-border transactions, store of value, et cetera. How you think about the impact of that on the overall financial landscape. But then if you want to take that a step further, I'll just throw in the second part of the question, which is the notion of a stablecoin itself giving broader access to digital assets themselves, such as the reality that you've got, something like USDC, where obviously the dollar is a massively important currency to the world for all the reasons we've described, but so is the euro. And so can stablecoins also open up adoption of digital assets for example, other fiat assets such as EURC? Would love to hear your thoughts on those.
Yeah, I think it's interesting that the fundamental value proposition of stablecoins is actually the same with respect to fiat currencies as well as digital assets, right? It's no surprise, and I fully agree with the way that Circle has thought about, the initial use case. Yeah, it was investing, it was trading, it was using it to hedge against price volatility. What is the value of a stablecoin in the context of fiat currencies? It's the same. It's quite frankly to hedge against price volatility across borders. It's hugely interesting to us because, at the end of the day, what we care about on our platform is what are people using stablecoins for? I mean, for every dollar cost averaging transaction these days, we see a global treasury management movement. We see a purchase for a cup of coffee. We see a transaction with a merchant. This is positive. And it's interesting because fundamentally, the purpose of the stablecoin did not really change. It's really to ensure stability, and it's an interesting and tough problem.
Yeah. I think obviously the stablecoin being used against volatility being a core use case, as well as an education aspect. I think that's quite important. Everybody knows what the dollar is today. In every market, I think everybody has an idea of how much is a dollar, what is a dollar. When we're looking at what is an Ethereum is, what is the value of an Ethereum transaction, what is the value of a Bitcoin, I think this is where suddenly there is a lot less. And there is a lot of effort into explaining this, but I think the stablecoin is a really interesting tool in educating people as an entrance to the Web3. We enter by something that we know, the dollar, and enables then to explore potentially with Luno cryptocurrency, but as well as kind of potential other Web3 aspects. So it's a very interesting revolving door that we can have and that a lot of people can have access to. So when we're looking at the stablecoin, I think, especially at Luno, we're very much looking at that aspect of being like, how can we enable it? For payment as well, can we imagine all type of payment in all type of cryptocurrency? Probably not. However, first payment can be imagined with the dollars, etc., in quite a lot of region. So I think this stablecoin is a really, really interesting enabler of new use cases because it just helps people kind of like understand it.
Yep. Wonderful. Anything you'd like to add before I
Sure. So again, building on what Curtis said, when you think of a young person in an emerging economy today, most of the youth that we deal with, their priorities are, number one, how do I get a better livelihood for me and my family? How do I put food on the table? How do I ensure there's a roof on top of my head? Right? So they're not in the spirit of speculating. In fact, we were talking about this earlier, they're looking at reducing their risk and making sure whatever they earn stays what they earn and they can save that. And that's where I really see the incredible value of stablecoin and why we are exploring, using USDC, for example, as the core default in-app economy currency within our ecosystem, is it provides that stability, that security, and scalability for our youth.
Right.
And in a way, educates them about the broader Web3 economy without any of the risks that might present themselves.
Got it. So when we think about whether it's blockchain.com or Luno or Goodwall, how you guys specifically are leveraging cryptography and blockchain. Notice I'm not saying crypto. Cryptography and blockchain to really empower the constituencies that you serve across the different countries that you are present in. How do you think about, first of all, how do you think you're making an impact today? Just a general question. But also, how do you think about user experience? A number of you just touched on this, user experience, safety, et cetera. One of the things we've been, that has kind of been woven throughout a lot of the discussions today is that, someday people won't have to worry about an Ethereum transaction. They won't even have to really even know what a blockchain is or understand that word, and hopefully no one will even use the word, because the average consumer, all they care about is that it works. And so when you think about your platforms coming at solving this problem in the way that you guys are doing it from your perspective, I would just love to understand, first of all, what impact are you having? And secondly, how you think about that user experience and the safety and the trust in the system, so to speak. I don't know, maybe Madeleine, would you like to start?
Yeah, I think, absolutely. I think obviously the emerging market is very diverse.
Yeah.
I think it's very diverse, one, in terms of regulations.
Yeah.
I think we are going from all of the spectrum, from the most kind of like crypto-friendly to the least crypto-friendly kind of governments, as well as in terms of access, going to people that don't have access to phone, to people that are constantly on the internet. So I think we're looking obviously at this extremely large spectrum.
Yep.
So when we're looking at very much kind of when we're looking at very much like, I really believe that innovation is created in those places because of this push factor that I've described initially. People need to have access to a way of keeping their money in a way that is trustworthy.
Yep.
There is a lot of places where there's an absence of trust in governments, in their government, other governments in general, as well as, so it is really important that trust aspect is really aspect.
Yep.
So stablecoin is a really key places to play, being kind of this neutral.
Let's be underscored in indelible ink that you can trust this.
Yeah, in this. So I think this aspect of like kind of like, we're talking about safety, we're talking about trust, obviously with cryptocurrency, but I think we all have a large responsibilities ensuring that our customers' money is safe, that ensuring that we are offering that like kind of like top level security, top level transparency, and I think that's very much needs to be a standard across the entire industry.
Understood.
Yeah, safety, trust. These are table stakes. You must have these in order to make any impact in the financial ecosystem. What about circulatability? What about reach? This is something that blockchain is very conscious of. We took almost the inverse route to the market than other platforms that have been around as long, which is we started with a set of DeFi solutions. And today, from a user experience perspective, one of the things we really prioritize is what we call like a super wallet. So anybody who is verified and onboards onto our platform creates both a custodial wallet and a DeFi wallet. Why is this important? Because that's really where the difference between stablecoins versus like e-money happens, right? Like the on-ramps are basically the same. You do it through a bank, you do it through a payment partner. It's what can you do after you've onboarded it that makes the difference. And so for us, when we think about user experience, educating people, it's yes, what can you do to on-ramp via your custodial wallet? But then it's like, what can you do beyond that in the DeFi space? Like, how do you leverage the benefits for FX management, for lending, for any kind of market participation that's disintermediated? You need stablecoins for that. So, you know, it's a big deal, I think, to think about not just like the custodial and on-ramping side. Yes, safety, security required, for sure. It's what can you do after that?
Interesting. Omar?
Sure, thank you. So at Goodwall, you mentioned in terms of how we create impact. Right? So at Goodwall, essentially what we've built is a skills-based impact social network for the next generation. You take last year, we hosted around 200 campaigns and competitions alongside some of the largest companies, Fortune 500s, Accenture, SAP, PwC, governments, the United Nations, in order to mobilize and engage young people at a massive scale. Right? We reached around 90 million young people in the last year alone through these campaigns and competitions. But to respond to your second question, where we're really excited about leveraging stablecoins in particular, is in making micropayments cross-border at a large scale. So one big opportunity that we have is, I mentioned earlier how there's a massive talent surplus in the global south, massive jobs shortage. So where there are no opportunities, what we learned from the pandemic is, well, we should create opportunities. And one of those is incentivized impact actions. So imagine all across Africa or in South Asia, instead of just expecting young people to volunteer their time, they were paid in microtransactions for recycling, for planting trees. And to do that at the scale that we want to do it, but at a cost that's also manageable and at a time and with trust, that's where stablecoin really can take that.
Or the concept of a programmable money, because it's actually programmable,
And in an automated, scalable way that we don't need to, that we're able to bring this vision to life.
Like that on a one-to-many basis. Are there specific, whether it's user interface matters or whether it's how you communicate with folks in different parts of the world, are there literally examples of unique things that you've done in one market versus another to solve the same problem, but because of, for example, you were talking about the education of that particular of those two populations might just be so, or their experience might just be so different that you have to attack the same problem, but in a different way. For example, perhaps first embracing them with the warmest, easiest to understand education at first versus really harping on trust and transparency. It's a pretty sophisticated audience, but they're so cynical because of their own government or banking system or what have you. I'm just curious if you guys have any examples of that.
Yeah, so definitely. This is absolutely a reality. When you're looking at the products do need to look different in different places. It needs to be looking at different type of partners that we need to work with. And it's not just language, it's very much what is how do you welcome customers in a country over another will be fundamentally different. And what's really interesting is as soon as you actually change a small aspect, such as you use name ID card instead of identité or something like this, you will see a direct reaction of customers. It is very interesting. We're very much looking at localization and talking to customers in a local way, being absolutely stable, absolutely super important. Another aspect is payment. Some customers are very interesting in payments. Some others are not. And we're seeing that it's quite different across region at the moment. The level of maturities across different countries is quite different. There is quite a lot of different. Even in terms of, there is popularities in terms of different cryptocurrency themselves. There is some countries that are very Bitcoin heavy, and we're seeing very much a love for Bitcoin. And there is France, for example, is very Ethereum friendly. Love Ethereum here. So it's quite interesting to see those different places where you just have quite a local, different aspect.
Exactly.
Sorry, just in just one last thing about the localization that's so important, because it's a double localization. It's a localization that enables the regulators to be comfortable as well as the customers. So it's a very much, we need to always think about this double aspect here. It's never just about one or the others. It's very much about how do we ensure to get both of them working hand in hand.
Wonderful. Yeah. Curtis or Omar, anything to add on this one?
So in our experience, localization has really been about building upon existing trust, right? Yep. So whenever we launch a campaign, it's typically launched with local influencers or role models with whom our youth can relate to. And typically it's not someone lecturing them, it's really someone showing them, and by their example, you're able to see, oh, I could do the same.
Yep.
A really concrete example, and this applies all across the world, but we have to localize accordingly. We were tasked by the Gates Foundation during the pandemic to build trust in the vaccination process for the pandemic across West Africa, where youth did not trust their governments necessarily. And the way in which we did it was we got youth to themselves take photos and videos of them getting vaccinated and share that with their peers, and as a result build a movement. So making it not just localized, but as relatable as possible. And to make that into a reality, you have to include your audience as part of your offering in that sense.
Interesting. Okay, cool. Curtis?
I do agree with Madeleine's perspective here. It's really ironic, to me anyway, that the language of investment and investing as a person varies so dramatically from region to region and market to market, but the underlying laws are actually fairly uniform. Like if you think about securities laws in one jurisdiction versus another, they're all largely reconciled at this point. Whereas in the inverse, the language of payments, how you use money, how you use stablecoins or crypto for payments, is also largely universal, but in the inverse, the laws underpinning those are highly fragmented and they're everywhere. And so when we look at localization, it's not like a bank app in Europe looks very different to a bank app in Brazil.
Yep.
Like the front end is largely the same. A lot of the localization has to happen under the hood. It's where you tackle the fragmentations in regulatory frameworks, jurisdictional reliability of payment processors, partners, differences in onboarding, all of that's under the hood. And that's the hard work. Right? That's the part of the work where we make it so that
they will use your banking app or your whatever your app.
And they don't notice what protocol it is. And they don't notice what payment processor it is. So localization is huge, but we don't really index on localization of products. We index on localization of the operation that supports it.
The infrastructure underneath it. Yeah. So we only have a few minutes left, and I'd like to take us into do we have a question? Please, feel free.
How do you guys think about yield-bearing stablecoins, the development of that, and where does it fit in the framework that you've been describing?
Well, I will just quickly say that the minute you get into, and then you guys can absolutely go for it, the minute you get into yield-bearing stablecoins, you're into a stablecoin no longer just being a stablecoin. It suddenly crosses into the world of very possibly being some form of a security. So that's some tricky ground to tread for a company that's trying to just focus on a stablecoin as a stablecoin, like a form of cash. And so that's just sort of Circle's perspective on that. But you guys, if you have any thoughts on yield-bearing anything, frankly, interest-bearing, whatever, with respect to digital assets.
We love it. Within the bounds of the law, within the bounds of regulation, having covered adequately, an asset is an asset, and it needs to get into people's hands. So we're sort of agnostic, honestly. It's an innovation that we look forward to supporting.
Yeah. Anything else? Or there was another question. I'm happy to take it. Go for it.
I come from the world of DeFi, so a lot of the innovation has come from the rest of stablecoin. But I feel that a lot of the stablecoin volume today is dollar-based, a little bit euro-based.
Yvon is here,
and other ones.
Stephanie's
We're talking also
not
about
yet here,
adoption
and
in
Frédéric
emerging
Antonio.
markets. In a lot of emerging market, governments at least see de-dollarization as a sometimes.
To make sure that
One question I have
if you see them, Stéphanie
do
et,
you receive any
Frédéric,
assistance from governments
ils vont
in
aider.
the introduction of dollar-based instruments?
Mm-hmm.
And then the other one is, do you see any room for local currency stablecoin growth?
Yeah. I'd love to have you guys take a stab at that.
Could you repeat the question before
yes,
you
of course.
answer it?
The
Thank
question,
you.
The question was dollarization sometimes is not, I'm just going to summarize it, embraced by countries where the dollar is not their national currency. And so does the industry, do you guys face any pushback if you're trying to leverage something like USDC or EURC in an environment where there is, the country has its own currency? In addition to the fact that, are there other currencies that maybe could be digitized at some point? And how do we think about that? So, and why don't we keep our answers to maybe 30 seconds each, and then I'm going to do a quick round of just future stuff, and then we'll wrap.
It is a very common thing that we're hearing. I think it is, we're still in the very new things. I think regulators are finding out as well, and they're experimenting, and we're all working together in trying to figure out what does work. So I think that's kind of I think there is a real importance in distinguishing stablecoin and central bank dollars. I think that's a really important difference. We are not talking about US dollars that are issued by the central bank. And I think that's a really important difference here, that there is a difference. I think the potentiality of having, for example, the euro coin and other large currency is really interesting as well, and is looking at, therefore, the kind of different aspect. I think we saw it in cryptocurrency, actually more currency ended up being more value for everybody. So I think that's definitely something that I'm personally very excited about. But yeah, I think other currency will be really interesting to look at as well.
Do you guys, either of you have a quick answer or a quick reaction?
Well, thank you, Yago. I mean, it was something we as a company spoke about at length and actually built upon. If you take the Good wallet today, actually, even if it says X dollars in your account, we always display, depending on where you are in the world, in the 150 plus countries that we operate, how much that would estimate or convert into in your local currency, right? To make it as relatable as possible. If you're in Kenya, it's in shillings. If you're in Nigeria, it's in naira. And in an ideal world, if there are more stable coins, we'd love to have that across the world. But at least as of now, we do convert it, at least theoretically, into your currency so you can value it.
Mm-hmm. And Curtis? No? Okay, great. So super fast, when you think about, I mentioned this in the earlier panel, when you think about where the internet was in 1999 versus 2009, and you had it basically serving one function, which was to transmit some information from A to B cheaply and expensively, very easily, et cetera. Then in 2009, suddenly you had a number of components had evolved which enabled a company such as Uber to exist. So you had geolocation, you had payment, you had the aggregation of data, and then doing something with that data. When you think about working with, a lot of what Circle tries to do is push out to the world the technology, those building blocks that will in fact enable, just like the ones I just mentioned enabled something like an Uber or an Airbnb to exist, whether it's smart contracts, whether it's programmable wallets, et cetera. When you think about partnering with companies in the ecosystem like a Circle with respect to what we could do with all of this going forward, what's your sort of, oh my God, I can't wait till the day when we can do this? And I'd just love for you all to answer that in terms of how it could serve the markets you serve. Yeah.
Oh my God, I can't wait until we can use USDC, but directly for payments in the real world.
Mm-hmm. All right, like mainstream use cases and adoption.
A credit card of some kind.
Yep, okay.
Amazing. Or debit.
Debit, yep, okay.
Yeah, for me, it would be really empowered customers themselves. You don't have to be an organization. It's really this kind of as an individual, kind of so much more is possible.
Yeah.
Would be really key.
True financial empowerment.
Yeah.
Yep.
True financial empowerment as an individual, everywhere.
Gotcha.
That would be fundamentally different.
Curtis, take us home.
We think about inclusion in general a lot, like principles. Mm-hmm. And it's like a rising tide lifts all the boats.
Yep.
But it's like, where are the boats? Like, who is proactively leaning in to try to be included? Like, who is trying to use stablecoins? Who is trying to use crypto? I'm I'm excited about the day that anybody who wants to use crypto can do it in like 3 clicks.
Yeah, right. Super easy, no jargon. It just works. Yeah, awesome. Thank you guys very much. Really, really appreciate your time up here.